good afternoon and welcome to this edition of Finweek Money Matters. Remember, this is the show that helps you manage your finances. I'm Dumisha Greater. Coming up on the show today, we take a look at the future of retail loyalty programs, and we'll be discussing the outlook for PPC. And later on in the show, we have a panel of experts in studio with us, and they'll be sharing their views on the state of South Africa's economy. But before we delve into all of that, do remember that we welcome your comments and any feedback. You can send it to us to moneymatters@abn360.com. But first, let's take a look at this week's Trend of the Week. The days of carrying loyalty reward cards may be over, as mobile applications are set to replace traditional loyalty programs. Now, while these applications offer the same cash and discount rewards as cards, they're more convenient and secure for consumers to use. They also have a benefit for business by saving costs with direct marketing and real-time consumer engagement. But to join me from our Cape Town studios to tell us more about this is Nolan Daniel. He's a director at software and web solutions provider Paradigm Group. Nolan, thanks for your time. First of all, just tell us about these apps. How do they differ from the traditional cards that we are used to?
Okay, well, basically what happens is instead of issuing you with plastic loyalty cards, retailers would now issue a mobile application which they make available in the various app stores for customers to download. Once customers download, they can register and then start transacting. And then similarly to normal loyalty cards, they can start earning points and redeeming them for rewards at a later stage.
Mm-hmm. I heard customers need to download this, as you've just mentioned, but accessibility to Wi-Fi, is this something that you need to have? You need to have access to internet. I just want to know, how easy it is for the consumer to do this.
Again, it depends on the implementation of the system, but the big benefit here is collaborating with your customers, and that means you do need some degree of data, whether it's cell data or Wi-Fi. It just allows you to speak to your customers and send them relevant information at the time where it will be relevant to them. So there are various technologies.
Just touching on that technology, there's something there called geo-tracking, and of course this is also meant to be something that will help you have a greater engagement with your customers. What is geo-tracking, and by the sounds of it, do people not have any concern in terms of it maybe infringing on consumers' privacy?
Geo-tracking is the ability for the application to determine where you are. So the application is location aware, and that provides merchants the ability to know where you are, and they can use it to entice you to go into the store, depending on the technology. For instance, if they use geofencing, which is a cell phone triangulation, they can entice you from about 20 kilometers away to get you in store. And then there are other micro location aware technologies where they can actually pick up that you're standing next to a particular shelf in store. And if they know that you usually buy a particular brand of cola, they can say, well, if you buy the cola now, we'll give you 2 for the price of 1, for instance. It's on your left-hand side. In terms of where the consumers should be concerned about it, it's really something that they have been using for many years. If you think about your mapping solutions and your social media where you check in when you visit your favorite restaurant, it uses the same underlying technology. What's just important is that merchants be very upfront with their customers to inform them that they will be using location-aware technologies.
I'm one of those people who's quite resistant to change, especially on the technology front. Unfortunately, I still have a card and have not yet adapted to having these mobile apps. How long do you think it's going to take until we do see this phasing in of having loyalty programs entirely done via mobile, or until we cease to see people like myself carrying around that card?
Well, the technology is becoming more and more pervasive. If you think 7, 8 years ago, we didn't even have cameras in our cell phones, and if you can't even imagine a life without cameras today. What we've found is that a lot of retailers are currently piloting mobile applications, and some of national operators have actually started changing. They've removed their old traditional loyalty card, and they are now rolling out mobile applications. So what we see in the next 2 to 3 years, you'll probably see a lot of the bigger companies coming out with mobile applications. Cards will never go away completely, but within this next 7 to 8 years, we feel that cards will be the minority.
Nolan, thanks so much for coming in and telling us about the future of loyalty programs and the cards. As you were saying, the next 7 to 8 years or so, you may no longer need it. That was Nolan Daniel. He's the director at software and web solutions provider Paradigm Group. Let's now take a look at this week's Punt of the Week. The construction industry and its related sectors remain under pressure as spending on infrastructure remains at low levels. The share prices of most of the major South African construction companies fell by between 42 and 72% just in the past year. While the poor performance of the construction sector has also had an impact on its major suppliers such as steel and cement, our manufacturers, as we mentioned from there. But joining us to discuss the outlook for Pretoria Portland Cement, or also known as PPC, is Finweek contributor Moxima Gama. Moxima, thanks for your time. PPC, it's been an interesting time for them. We did see Ketso Gordon move away, and also we did see that that proposed merger regarding AfriSam fall through. So what's the status quo currently?
Well, the thing about PPC is it's really plunged quite a lot, and usually when there is bad rumor like that and it's fallen as much as it has, it tends to just price it in. So at this point, I have put a bit of a contrarian hat in calling it a buy, well, a neutral buy, because it's all this news. There's been a lot of negativity surrounding the index or the sector itself. So at this point, it's really starting to just middle down and not ignore the noise and start taking a different formation.
In terms of investor sentiment, you did say that it is going to start to come down, but let's just talk about the fact of where that share price performance has been like. Where is that current standing at the moment?
Look, PPC is testing quite low levels. This is from the time from those good old 2010 days, and after that there was a lot of rumor of bribery in that sector, which inevitably it then plunged from that point. So it's testing levels it's been testing in the 1990s. So at this point it makes a good buy because it can't fall any further. It could effectively, but we're seeing a bit of a bullish base forming, which will then start off at least the ascending phase of a huge bottoming out pattern. So I specifically chose PPC because it's really forming a bottoming out pattern. It seems like sentiment is starting to warm up slightly to it. So at this point, you'd probably buy neutral, take a neutral position and increase your position at every resistance level breakout. It is still pretty much on volatile terrain, but stocks that kind of form this formation can surprise you with good upside.
Well, you seem very bullish on that, as you've just said, Moxima. What are maybe some of the factors that you need to take into consideration before you go into this particular stock? Because you did say sentiment is starting to turn positive here.
Look, if my call would completely go wrong if it went anything below 17 Rand towards those 15 Rand marks, then it would just mean it's prolonging it's extending its bear trend. But if it starts trading anything substantially above the 1950 mark, we could see a 100% retracement gradually to its all-time highs if you look at the chart at that point. So your first resistance would be around the 22 Rand mark and then all the way to 28. It is a long-term call, but like I said, there is that bullish base that's forming that you'd probably want to take an opportunity on. It's really plunged, and usually these stocks are quite the best because they're cheap at current levels. So just watch out for support being breached at 17 and probably start buying at any level above 19.15.
Moxima, thanks for that. That was Finweek contributor Moxima Gama. You want to stay with us because when we come back, we'll be looking at the state of the South African economy. You'll remember this week it was all eyes on the US Fed Chair Janet Yellen. We do still see that deadlock that still exists between Greece and its creditors. But what does this all mean for South Africa? Stay with us to find out more.